Okay, hey everybody, this is Scott here again with my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. Now, if you have seen my recent live trading videos or if you've been watching my channel for some time, then I'm sure you've noticed I am pretty bearish on the market, and I have been bearish on the stock market pretty much ever since the beginning of the COVID pandemic. But of course, thanks to Jerome Powell and the Federal Reserve, they've been able to keep this market afloat since the crash that we saw in 2020 with their endless printing of trillions and trillions of dollars, and basically in the process destroying the American currency. And so naturally, the main consequence of devaluing your own currency by simply printing more of that currency is inflation. And as I've shown in previous videos, inflation in the US is pretty much out of control at this point, right? We're basically seeing multi-decade highs in inflation. And now, at this point, the Fed is going to be fighting itself, right? Because the Fed caused inflation by their endless printing of money. And now the Fed is trying to combat inflation while still printing money by increasing interest rates, or at least they're planning on doing that at some point over the course of 2022. So basically the point I'm making here is I do think right now is a very interesting time in the market because this is essentially the first time where the Federal Reserve's manipulation in the market, which really began back in 2008 and 2009 with the housing market crash, right? That's pretty much when the Fed began its whole quantitative easing process. So now, 13 years later or whatever, this is the first time where that policy is finally beginning to come around and bite them in the ass. And so now over the course of this year, we're going to see exactly how this internal conflict within the Federal Reserve of trying to combat inflation by increasing rates while also trying to still print money and purchase assets to keep things afloat, which makes inflation worse. We're going to see how this conflict plays out over the course of 2022. And if you ask me, and also as you'll see in this video with my charting analysis, the situation is looking increasingly more and more bearish. And also inflation is continuing to get worse and worse, right? As we saw with the CPI number back in January, that basically hit a 40-year high, and we'll see what it's like in February in a few weeks. And then of course, on top of all this, we now have the Russia-Ukraine crisis, which is continuing to escalate. So definitely keep all that stuff in mind as you're watching this video because, as I mentioned, I'm going to show you a lot of analysis on both the S&P 500 and the NASDAQ to illustrate how things were playing out over the course of this week. And as you will see here with the price action that we're witnessing, it is aligning itself more and more and more with an incoming bear market. And moreover, on top of all that, you're also going to see two new trades I placed this week as well. One new trade in NUE, that's Nucor Corporation. For that one, I sold a short call option. And then I also put on a new trade in Spotify, which was a short strangle. And so in particular, I'm going to share my exact thought process and all my charting analysis that I was doing for those new trades so you can see exactly why and how I put on those positions. Now, as always, before we fully dive in here, in case you are brand new to the channel, I also want to let you know that you can find me on Skillshare as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so with that being said, I'm going to stop here and play a few clips that I recorded throughout the week that again will show you all that charting analysis with the S&P 500 and the NASDAQ and also the new trades I put on this week as well. So let's get started. All right, today is Monday, February 14th, and today we saw a very interesting trading session in the market. There was a lot of two-sided action, a lot of back and forth basically, and in particular, about halfway through the day, we saw a pretty massive sell-off because of some increased tensions between Russia and the Ukraine. And so I was very carefully watching the charts here because we are also at a very pivotal price point with the market. So what I'm showing you here in this chart is SPY, an ETF that tracks the S&P 500. Let's go ahead and zoom in a bit. So if you've seen my recent live trading videos, then you will have seen me draw in these various support and resistance levels here in white. And right now, these are the major price points that I have my eyes on. And as you can see right now with the S&Ps, as of last Friday, we cut just below this midline right there. And today we got right back up to and just barely touched it. And so today, essentially, this line was the main thing that I was really focusing on. In particular, I wanted to see what the S&Ps would do if it got up to and touched that point. Was SPY going to break back above it and perhaps push back higher up to the higher end of this range here? Or, and this is what's been happening so far today, would the S&Ps get repelled off that point once they touch the resistance level? And like I mentioned earlier, about halfway through the trading session, we saw a pretty massive sell-off in the market. So that's why with this candle here, the S&Ps got all the way down to about 435 bucks per share. And excuse me, when I say the S&Ps, I'm referring to SPY in this case. Now, SPY did bounce off that low and did try to rally all the way back up again, but it did fall a bit short of that point by the time the market closed. So at least so far, I'm still definitely reading this here today, this price action, as very bearish. And my expectation at least is to see SPY continue to move lower and lower and lower until we hit this support level down here right around 427 bucks per share. Of course, I could definitely be totally wrong, but based on what I'm seeing with the charts here, that is simply my expectation or my best guess. And so once I saw that pretty big sell-off about halfway through the day, and I could see very clearly here that SPY was being repelled off of that resistance level, at that point, I decided to make a new trade. So in particular here, this was a new bearish position on NUE. Let's take a look at the charts there. So NUE is Nucor Corporation. They're basically involved in the production of steel and other steel products. And if I go ahead and zoom in here a little bit, also take note of this pretty rough resistance level right around here at 123 bucks per share or so. Again, this is a pretty rough estimate, but as you can see here and here, here, and all the way back over here, Nucor has had a very tough time getting above that price point. So that fact, plus the fact that NUE has done nothing in the past couple weeks here, but just goes straight up. And also, as I pointed out on the SPY chart there, I do think stocks are poised to go lower over the next few days. So all those things together is why I decided to place a bearish position on NUE here. Right, basically all those things considered, I do think the odds here favor a down move for Nucor. And perhaps we are already starting to see that right now over the past couple days here. And then, of course, also I can't forget to mention down here with the implied volatility, this is also another reason why I decided to make this trade. The implied volatility for Nucor is definitely still pretty high compared to the past, right? So the actual value for the IV is just above 54%, and that translates to an IV rank of 74%, very good, and also an IV percentile of 96%, very, very good. So basically these two metrics here will tell you, objectively speaking, how high or low the current value of implied volatility is for Nucor. And again, that's comparing it to the past 1 year. So therefore, what that all means is because the IV for Nucor is pretty high, the option prices for the stock are also going to be inflated for the time being. So again, once I saw SPY get repelled off that resistance level, and I thought that perhaps there might be a good chance that stocks could move lower over the course of this week, at that point, I went over to the trade tab here and made a new trade in Nucor. Specifically, I sold the 125 strike call option. And this trade here is also my first March position. These options expire in 32 days. And at the time, I sold this contract for $384 in premium. So looking at the bid and ask prices now and going right in between, the fair price for this contract has dropped by a few bucks today. So definitely off to a good start here with this position. So that's NUE, and then also I did take off my positions in both Roblox and Nvidia today. And unfortunately, that was definitely not something I was wanting to do. I was trying to hold both those positions to the expiration date, which is this Friday, but unfortunately, the earnings announcements for both those companies got moved up a few days, and they now conflict with my positions. So for example, with Nvidia here, let's go to the trade tab with that. So for this trade, I had on a short call option at the 230 strike right there. And as you can see, this option is in the money, so I was also long 100 shares of the stock. But again, as I explained, I did have to remove this entire position. So I bought back the contract, sold the 100 shares, and unfortunately had to do so for a small loss. And that's because I wanted to avoid the possible situation where come the earnings announcement, which I believe is on Wednesday, if Nvidia was anywhere near my short call strike once the market closed, and then if that earnings announcement came out and the stock went crazy, I'm not going to have a good opportunity to buy the shares if my option goes back into the money. Or perhaps if the stock plunges and I was already long 100 shares, then again, I'm not going to have a good opportunity to sell those shares for a good price, right? And that's because after hours trading is typically plagued by a lot of choppy, very gappy price action. The liquidity of stocks is very poor essentially because there's very few participants. And so again, that's why if there is an earnings announcement that I'm not trying to play specifically, I will try to avoid that at all costs. And so that's the update for this clip, and I will see you in the next one. All right, today is Wednesday, February 16th, and the first thing I want to do today is place a brand new trade here in Spotify. And this is actually the first time I'm trading the stock because it wasn't until recently where this stock actually became somewhat more affordable. Right, currently with the stock being about 160 bucks per share, that's not too high price. So therefore, at least with my account size here, I can start selling naked options on Spotify now. Now, if we focus in here on the charts for a second, and let's go ahead and zoom in a bit. So as I mentioned, Spotify has definitely come down a lot in price over the recent couple months here. And based on this sideways price action here, I'm going to place a trade that will bet on this kind of thing continuing to happen for the next few weeks at least. So essentially, I'm going to place a directionally neutral trade here, or basically a short strangle. So that's a combination of selling both an out-of-the-money call option and also an out-of-the-money put option. And therefore, I'm essentially betting that Spotify is going to remain in some kind of range over the course of the next few weeks. And also, if we take a look at what happened back here at around November and December of last year, as you can see, Spotify went through a big down move and then a lot of sideways price action. And then once again here, big down move, and so far, a lot of sideways price action. So perhaps this could be an indication that this will continue for some time. Of course, that being said, what happens in the past is definitely not a guaranteed indication of what will happen in the future, but that's also part of my reasoning here. And then finally here, if we zoom out on this chart and go back a few years, so right around this point, let's focus in here. So going all the way back to 2019, as you can see, Spotify definitely had a very hard time getting above this price point, which is 160 bucks per share. So during this whole period, that price point was acting as resistance. But eventually Spotify broke above it and for quite some time stayed above it. But now the stock has come all the way back down once again to right around 160 bucks per share. So perhaps now this price point might act as support, which might therefore keep Spotify afloat and just keep grinding sideways. So then with that said, let's go back to a 1 year, 1 day chart right there. And then also one more thing to point out here, if we come down to the bottom and take a look at the implied volatility for Spotify. So as you can see, there was definitely a very large buildup of the implied volatility for the stock leading into the earnings announcement. That's typically what happens. And then of course, once those earnings figures come out, the implied volatility usually crushes or collapses. Now that being said, the IV for Spotify is still pretty high even after this pretty big crush, right? With the implied volatility level at over 63%, that translates to an IV rank of 49%, very good, and also an IV percentile of 92%, very, very good. So basically this means that the implied volatility right now for Spotify is still on the very, very high end compared to the past 1 year. And you can definitely tell that just from visually looking at this chart here. As you can see, looking at the past, there were very few times where the IV for Spotify got above 60% or so. And so, of course, that means the options on Spotify are still going to have some pretty inflated prices. So as an option seller, that's going to entice me to step in and sell those options. So now with all that being said, let's come over to the trade tab and take a look at the option chain for Spotify. For this trade, I'm going to go in the March expiration cycle with 30 days left to go. Let's unfold that tab. And so as you can see here, I've already gone ahead and picked out my strikes. For the call side, I'm going to sell the 190 strike. This one has a 19 delta. And then for the put side, I'm going to sell the 140 strike with a 17 delta. So again, pretty much a very directionally neutral strategy here. I don't really care if Spotify goes up a little bit or goes down a little bit. Basically, I just want it to stay within the range of above 140 and below 190. But of course, if it does go beyond this range, for example, if it goes above 190, then at that point, I will buy 100 shares of the stock to cover my call option. And then conversely, if it falls below 140, I will short 100 shares of the stock to cover my short put contract. So now at this point, let's go ahead and right click on the call option and we'll go to sell and strangle. And there we go. Here's the order. Just going to sell one contract of both the 190 strike call option and also the 140 strike put option. And the total credit I'm going to collect for putting on this position is going to be right around 550 bucks or so. So the mid price for the strangle is 555 right now. I'll try and lock in that price and see if I can get filled right away. Go to confirm and send. Now the buying power effect on this trade is about 1,600 bucks. That's totally fine. Still under 5% of my total account size, which is where I like to be. So now we'll just go to send. And no fills yet on that order, so we'll come back to the monitor tab and perhaps lower my price a little bit. So right there is my order, and I'll go ahead and right click and go to cancel and replace. let's try and come down to perhaps 550 bucks. See if I can get filled there. Confirm and send and send. And there we go. Just got filled at 540 actually. Had to come down a bit more in price there. And my guess as to the reason why I did have to come down a bit more in price there is if you take a look at the volume and open interest for these contracts, they're not that great right now, right? Including the order I just placed, only 4 of these call options have traded so far today. And as with the put option, kind of the same thing, only 5 contracts. So definitely a bit difficult to get filled on Spotify options right now, at least for the March cycle. But if you come take a look at the February cycle, which is expiring in only 2 days, as you can see with the call options here, definitely a little bit better in volume and certainly a lot better in open interest. So hopefully as time moves forward a little bit more, and perhaps once the February cycle rolls off and most people are focusing on the March cycle, perhaps at that point we might see better and better liquidity for that March cycle. But then also one last step here with my Spotify trades. So we'll come back to the March cycle and set up my GTC closing order. So now we'll go to buy and strangle. And here we go. This is my closing order. Gonna buy back the 190 strike call and the 140 strike put option. And as usual, I'll try and do so for half price. So half of 540 is 270. And then lastly, make it a GTC order so it's always in place, and confirm and send. All done. Awesome. So that's my new trade today in Spotify. And then lastly here, let's come back to the charts and take a look at where the broader market is today as well. So in this chart here, I'm showing you SPY, an ETF that tracks the S&P 500. And as you saw in the previous clip, I was really hoping for a continuation down lower for the stock market as a whole. Right, as I explained, I saw SPY getting repelled off this resistance level, and therefore I thought we might resume back down lower to perhaps this support level at around 428 bucks per share or so. But it turned out that the Ukraine-Russian crisis has cooled off for a little bit, at least for the time being. And so on that good news, the market rallied yesterday and popped back over this resistance level. So therefore, it has now flipped to support. And as you can see today, with SPY coming back down a little bit, it came back down and just touched that point, that now support level, and then zipped right back higher. So now at this point, we are definitely stuck in this range right here, between about 440 bucks per share or so and about 460 bucks per share. So now it's up to the market at this point to either break above or break below this little range here. Right, as I've explained before, if SPY can get above this point, then we might likely see a recovery back to all-time highs again. There might be one last point of resistance right around here at about 470 bucks per share, but there's really not much else keeping SPY from making all-time highs beyond that point. And then finally in this clip, one last thing to show you. Let's come back to NUE and take a look at this position. And I do apologize, there's a lot of stuff on my screen, so try to just focus on this white line right there. That is the resistance level I drew in very recently. And so as you can see today, actually for the past 2 days, NUE has come back up a little bit, which is definitely a bit unfortunate given my position, but so far it is still unable to breach and remain above that point. It definitely tried to do that today. NUE got to a price of about 124 bucks per share, but since that time, it is backing off. So I'll definitely keep a very close eye on this trade here. And of course, if I'm totally wrong on this position, and let's say perhaps NUE does finally break above this point and continue to push higher, at that point, once it breaches my short call strike at 125, I will purchase 100 shares of the stock and convert my naked call option into a covered call option. So by no means here, if I'm directionally incorrect on this trade, does that mean the trade is just over? There is still a strong chance that I could profit on this trade by the expiration date or perhaps a bit sooner, even if the stock goes to 200 bucks per share. I simply like to use a little bit of technical analysis here to help pick my trade entries a little bit better and to give myself the best chance of being directionally correct. And so with that being said, that's going to do it for this clip, and I will see you in the next one. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally in this video, let's go over the charts one last time. And then also I've got a few more things to mention with some of my existing positions. And so coming up here, let's take a look at QQQ real quick. This is an ETF that tracks the NASDAQ, right? And so like I was mentioning at the beginning of this video, pretty much every single time we see a short-term rally, right? In this case, as I showed you in one of those previous clips, the market popped back over this former resistance level because the headlines were that the Russia-Ukraine crisis was beginning to cool off. But as of yesterday and this morning, it seems like that crisis is beginning to heat back up again. So once again, pretty much every single time, at least recently, that we are seeing a short-term rally in the market, it's getting met with a much, much larger wave of selling. And that's very indicative of a bear market. So now once again, we've broken down below this line, right around $350 per share, which therefore flips it back to resistance. And now we're approaching this line down below at $340 per share or so. This one is still acting as support, at least for the time being. And this is pretty much the last bastion of hope for the market, right? If the Qs here and also with the S&P 500 break down below this line, there's really not much else keeping this market afloat. Of course, we could go much further back in time to see if we can locate another support level, maybe back over here, right? Perhaps the Qs might find another major support level somewhere around here at $316 per share or so. But again, if this line breaks, my guess at that point is we're going to see another big leg down lower. Basically just like this one here. This was the first wave or the first major leg down. And then of course, as to be expected, we typically at some point see a short-term bounce. And now it's looking more and more like we're going to see another big down move. And same thing with SPY. Let's take a look at that chart real quick. So SPY here definitely still has a little bit more room to run before it hits its major support level right around $430 per share. But we are definitely on the way to getting down and reaching that point now. So bottom line here is if you are involved in the market right now, please do be very careful about placing bullish positions. I know it's very easy to say that, stocks only go up. And for the most part, if you look at a long-term history of the market, yes, indeed, stocks do generally climb higher. But along the way, in the short term, we might see some pretty big bear markets or some crashes. So again, be careful about just selling put options, for example, and thinking that you're just going to make money super easily. This is definitely not the same market that we've been seeing for the past 2 years since the bottom of the COVID crash, right? Since that time, the market definitely has just been grinding higher thanks to the Federal Reserve. And so, yeah, any kind of bullish position was making a lot of money during that time. But now things are definitely changing. And then finally here, one last thing I want to talk about in this video is today is also February expiration, so I can finally remove the last few of my positions in the February cycle. And I say that with a lot of relief because this past expiration cycle was by far one of the worst expirations I've ever had. So definitely a lot of learning lessons for me over the course of the past 6 or 7 weeks or so. One of the most important was going forward, I definitely need to have a much better awareness of what the broader market is doing, right? And that's because I definitely got caught with too many bullish positions on. And once the market began to turn back in January here, and also things got very volatile down towards the bottom, I did get caught in a lot of very bad situations. So at this point for the year, definitely not off to a good start. I'm down by a few $1,000, but I'm also grateful that this happened because I'm always trying to learn and improve with my approach. And to be quite honest, in situations like we're seeing now, these are the best moments in the market to learn and improve your strategy, right? It's very easy to make money when the market is just doing one thing. If it's just grinding higher, then pretty much anybody can make money. But when things start to get crazy and we're seeing a lot of volatility, two-sided action, and perhaps beginning a full-on bear market, that's when a lot of skill and experience is required to make it through these kinds of circumstances. And so even though I definitely got caught in a few bad situations and I made quite a few mistakes, I'm still very glad that my strategy here, my general approach to options trading, still held up against some of these massive sell-offs. So lastly here, coming over to SE, this is the last February position I have on right now. And as you can see, I'll zoom in here a bit, this stock has done absolutely nothing except go straight down, with the exception of this one little dead cat bounce right there. And this same kind of thing also happened with my former Roblox position, Nvidia, DocuSign, Roku, etc. So for this one in particular, let's come over to the trade tab. This is one of the bullish positions that I should not have had on at the beginning of the year. So right now, I'm still short the 175 strike put option, which, as you can see, is extremely far in the money. But like I was saying, thanks to my general approach here with options trading, if in the case of a short put option, my strike gets breached, at that point, I will short 100 shares of the stock and therefore totally cover the put option. So let's go ahead and pull up the calculator real quick, and I'll move this right there. So initially, when I first put on this position a few weeks ago, which was actually a short strangle at the time, my initial starting credit was $885. Now, as you can see with the current price of this put option, let's say I wanted to buy it back before the market closed and avoid assignment. Well, the fair price for this option going right in between the bid and the ask is about $4,850. So from this price here, or from the starting credit, I would subtract 4,850, and that means I would walk away from this trade with a loss of just shy of $4,000. So obviously having no defense when you're selling naked options can be catastrophic in situations like we're facing right now. And so the actual outcome of this trade is going to be as follows. So again, initially my starting credit was $885. Now, as I mentioned, I did get caught in a lot of bad situations, this trade included. And so I did lose a fair amount of money from having to repeatedly short and buy back the stock as it was bouncing through this put strike many times over the course of this trade here. And that was mostly my fault because the prices I set in place for my orders that would actually take care of the shorting and buying back of the stock were too narrow. Meaning my short sell order was at something like $174.50. And then my order to buy the shares back if the stock reversed would be at $175. So the difference there is only 50 cents. And that was just way too narrow for a stock trading at around $175 per share. So point being is my orders got triggered way too frequently, and I lost a lot of money from that happening. And that was one of my learning lessons. So now going forward, I'm going to allow the stock to move a lot more before my short sell and buy back orders get triggered. And I actually did put that change into effect a few weeks ago, and since that point, I've seen much better performance. And so the total losses from having to do all that amounted to $1,564.37. So we subtract that number, and the result is a loss of $679.37. But I did also make quite a few adjustments to this position to collect additional premium or additional credit. And that additional credit amounted to $565. So that brings me back up to a loss of only $114. Now at this point, I'm going to go ahead and clear the screen on the calculator, but don't forget this number, $114.37. So then the final time that this stock crossed my put strike at 175, I shorted the shares at $172.91. Now once the market closes, I'm going to get assigned on this put option, which means I'll have to buy 100 shares of stock at my strike price at 175. So therefore, if my short sell price was 172.91 and I have to buy these shares back at 175, that's going to be a loss of $2.09 per share times 100 shares. That's a loss of $209. And then on top of that, I do have to add the $114.37 I lost from the earlier calculations, right? So that means the final P&L or the final outcome of this trade is still going to be a loss, unfortunately, but it's only going to be a loss of $323, which obviously is way better than having no defense on this position, even with making a lot of mistakes, and having a loss of almost $4,000. And again, the same kind of thing played out here with my Roblox trade as well, also with my Roku position a while back and a few others too. So having defense with your trading strategy is absolutely paramount, right? Because as I've said many times in the past, it only takes 1, 2, or 3 trades, really bad losing trades, to blow out your entire account or to ruin your whole year's worth of profits. So even though I'm off to a pretty bad start for this year and I'm down a few $1,000s, that's definitely not something I can't come back from in a pretty short period of time. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my Skillshare courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.